Get ready because the market is absolutely exploding with action, and if you're not plugged in, you're missing out. We're talking massive shifts, jaw-dropping numbers, and strategic moves that are reshaping the entire landscape. Today, we've got a story that's flipping the script on established trends. We're diving deep into where major players are positioning themselves in this volatile, fast-paced environment, and a look at how big-name endorsements are making waves. Plus, we're breaking down a significant corporate maneuver that could signal a major shift in how traditional businesses engage with digital assets. This is Bitcoin Bulletin, and you need to see this. Don't forget to smash that like button, subscribe, and ring that notification bell so you never miss an update. Ethereum ETFs surge ahead, a new era of inflows. The cryptocurrency market is witnessing a dramatic shift as spot Ethereum ETFs have captured an astonishing $1.83 billion in inflows over the last 5 trading days, a figure that dwarfs the $171 million seen by their Bitcoin counterparts in the same period. This nearly tenfold increase in interest signals a potential paradigm shift in investor sentiment, moving significant capital away from the established leader, Bitcoin, towards the rapidly appreciating Ethereum ecosystem. The data reveals a consistent trend of stronger inflows into Ethereum funds. On Wednesday alone, 9 ETH funds recorded a remarkable $310.3 million in net inflows, starkly contrasting with the $81.1 million across 11 spot Bitcoin funds. Leading the charge was BlackRock's Ethereum ETF, ETH, which single-handedly attracted $262 million, pushing its total inflows since inception past the $13 billion mark. This particular ETF has seen 5 consecutive days of positive inflows, accumulating $1.2 billion in that span, with a notable $1.6 billion in trading volume on August 27th alone. The net flow for BlackRock's ETH ETF on that day was an impressive 57,584 ETH, valued at $265.74 million. Analysts are pointing to this surge as a sign of growing institutional confidence and a strategic diversification by investment advisors. Nate Jarosai, president of Nova Dias Wealth Management, highlighted that spot Ether ETFs have accumulated close to $10 billion in inflows since the beginning of July, with a significant portion of that influx occurring in just the past 3 months. Launched just 13 months ago, these ETFs have now seen total aggregate inflows of $13.6 billion, underscoring their rapid adoption. Further analysis from Bloomberg Intelligence indicates that investment advisors are the primary drivers behind these substantial inflows. James Seyffart, a Bloomberg ETF analyst, reported that advisors invested over $1.3 billion, equivalent to 539,000 ETH, in the second quarter, marking a 68% increase from the previous quarter. This trend suggests that cryptocurrencies are increasingly being viewed not just as speculative assets, but as long-term diversification tools within traditional investment portfolios, sitting alongside equities and bonds. This increased adoption by institutional players has had a tangible impact on asset prices, with Ether outperforming Bitcoin this week. Ether saw a 5% climb from its Tuesday low, while Bitcoin experienced a more modest 2.8% gain over the same period. The data points to a renewed confidence in Ethereum as a valuable digital asset, fueled by robust institutional demand and strategic positioning by key market participants. But is this just a temporary surge or the dawn of a new crypto powerhouse? Stay tuned as we dissect the implications. Next, we'll see how Bitcoin is holding its ground amidst this shifting landscape. Bitcoin holds firm as other altcoins face pressure. Bitcoin has maintained its position near the $113,000 mark, showing resilience even as other major cryptocurrencies like Ethereum and XRP struggle to hold their support levels. This stability comes in the wake of NVIDIA's recent earnings call, which appears to have injected some positive momentum into the broader cryptocurrency market. However, on-chain data from Glassnode suggests that Bitcoin is currently trading below the cost basis for a significant portion of its holders. Specifically, It's below the $113,600 cost basis for 1 million holders and the $115,600 level for 3 million holders. This metric indicates that a substantial number of short-term investors are currently underwater on their positions. Analysts are cautioning that this situation could lead to heavy selling pressure during any rallies, as traders may look to exit their positions at break-even. Market watchers are closely observing key technical levels. Pentoshi, a prominent analyst, has stated they have no active bias on Bitcoin at the moment, but acknowledge the current zone as a critical pivot. They warn that if Bitcoin fails to advance soon and breaks below last week's low, it could trigger a sharp decline towards the $105,000-$107,000 range, potentially undermining the broader uptrend structure. Meanwhile, Ethereum is facing its own set of challenges. Trader Ted Pillows is monitoring whether ETH can gather enough momentum to break through resistance between two significant liquidity clusters. Alternatively, he suggests that a brief dip into the $4,400 zone might be necessary to build the strength required for a more substantial upward move. XRP continues its consolidation phase, trading just below its previous all-time highs from 2017. Trader Mags views this prolonged period of sideways movement as a potential accumulation phase, with potential breakout targets identified at $5.20 and $7.30. This suggests that while XRP is not currently making significant upward progress, underlying accumulation could be building. In other market movements, Solana is approaching a crucial daily close. Trader Posty points out that if this move confirms as a genuine breakout, the next target for Sol could be around $260. He notes that many spot buyers are already positioning themselves in anticipation of such a move, indicating a bullish outlook for the asset among a segment of the trading community. While Bitcoin shows resilience, the technicals suggest caution is warranted. Will these levels hold, or are we in for a shakeout? Next, we explore a massive equity raise that could change the game for corporate involvement in digital assets. KindlyMD secures $5 billion equity raise amidst corporate Bitcoin adoption surge. KindlyMD, a notable player in the wellness sector, has announced a monumental $5 billion equity raise, a move that is generating significant buzz within both financial and cryptocurrency circles. This substantial capital infusion is particularly significant as it occurs against the backdrop of an accelerating trend where corporations are increasingly integrating Bitcoin and other digital assets into their strategies, signaling a growing acceptance and utilization of this burgeoning asset class. The sheer scale of the equity raise suggests a strong vote of confidence from investors in KindlyMD's business model and future growth prospects. While the specifics of how this capital will be deployed are still emerging, the timing of such a significant financial maneuver is noteworthy. It aligns with a broader narrative of traditional businesses exploring innovative financial tools and asset classes to enhance their market position and financial resilience. The integration of digital assets, particularly Bitcoin, is becoming a strategic imperative for many forward-thinking companies seeking to leverage new technologies and diversify their holdings. This development at KindlyMD can be seen as a microcosm of a larger trend. Companies are no longer viewing Bitcoin as a fringe speculative asset, but as a potential strategic reserve, a hedge against inflation, or a means to tap into new markets and investor bases. The increasing accessibility of regulated investment vehicles like spot Bitcoin ETFs has lowered the barrier to entry for corporate treasuries and institutional investors, facilitating greater participation in the digital asset ecosystem. Furthermore, the involvement of prominent figures and institutions in the crypto space often acts as a catalyst for wider adoption. While the details of KindlyMD's specific crypto strategies are yet to be fully disclosed, the company's financial activities are happening in an environment where companies are actively seeking ways to benefit from the digital asset revolution. This could involve holding Bitcoin on their balance sheets, exploring blockchain-based solutions for operational efficiencies, or even issuing tokenized securities. The $5 billion equity raised by KindlyMD is not just a financial transaction. It's a statement about the evolving landscape of corporate finance and investment. It underscores the growing belief in the long-term potential of digital assets and the innovative ways companies are preparing to navigate this new financial frontier. As more companies like KindlyMD make bold moves, the mainstreaming of Bitcoin and digital assets in the corporate world appears to be accelerating, promising to reshape traditional business practices and investment strategies. This massive capital injection is a game changer, but what does it mean for the future of corporate crypto integration? Stay with us as we uncover a story connecting political influence with the booming world of Bitcoin mining. Trump's sons-backed American Bitcoin, poised for Nasdaq debut. American Bitcoin, a burgeoning Bitcoin mining firm with significant backing from President Donald Trump's sons, Eric and Donald Trump Jr., is on the cusp of making its public market debut. The company has successfully secured a blend of crypto and traditional investors for an all-stock merger, paving the way for its shares to begin trading on the Nasdaq Stock Exchange as early as September. This strategic move involves a merger with Griffin Digital Mining, a transaction that is nearing finalization. Asher Genoot, the CEO of Hut 8, which holds a substantial 80% stake in American Bitcoin, confirmed the progress and the anticipated September launch. Genoot highlighted the advantages of this merger approach over a traditional initial public offering, IPO, stating that it offers greater financing flexibility and access to existing capital structures. Instead of going public directly via IPO, we thought that there was a lot more advantages to financing if we had an existing company that already had access to different financing too. Genoot explained in an interview at the Bitcoin Asia Conference in Hong Kong. Key anchor shareholders have been confirmed for this listing, including notable figures like Tyler and Cameron Winklevoss, the co-founders of the cryptocurrency exchange Gemini. While Gemini did not immediately respond to requests for comment, their involvement underscores the significant interest and capital flowing into this venture. Upon completion of the merger, the new entity will retain the name American Bitcoin and trade under the stock ticker ABTC. The combined ownership structure will see Eric Trump, Donald Trump Jr., and Hut 8 collectively holding a commanding 98% of the newly formed company. Genoot also indicated that American Bitcoin might pursue strategic stakes in international companies, offering global investors access to publicly traded Bitcoin assets, particularly for those who face restrictions on purchasing Nasdaq-listed stocks. Launched in March 2025, American Bitcoin's emergence coincides with a period of increased attention on crypto-related legislation and policy initiatives during the Trump administration. Critics have raised concerns about potential conflicts of interest, suggesting that the administration's engagement with the crypto industry could be influenced by the Trump family's direct involvement. However, the White House has consistently dismissed such allegations. Genoot emphasized that American Bitcoin's operations are entirely independent of government influence, clarifying that Eric Trump's role is primarily focused on strategic aspects such as mining operations, site development, and treasury management. The company plans to accumulate Bitcoin through both its mining operations and direct purchases. In line with this strategy, Hut 8 will lease data center facilities to American Bitcoin, providing the necessary infrastructure for its mining activities. This high-profile entry into the public markets signals a major development for Bitcoin mining. Will this political backing translate into market dominance? We've covered a lot of ground today, from massive ETF inflows to strategic corporate moves and political endorsements. Let's quickly recap the biggest stories. Ethereum ETFs are absolutely crushing it, pulling in nearly 10 times the inflows of Bitcoin ETFs this week. Bitcoin is holding steady near $113,000, but watch out for those short-term holders. KindlyMD just raised a massive $5 billion in equity, signaling big moves in corporate digital asset adoption. And get ready for American Bitcoin, backed by the Trump sons, to start trading on Nasdaq in September. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell, and follow us on all our social channels for more updates.